Hi, my name is Bruno and I'm a postgrad student at UNISA. First, I would like to acknowledge that we are on the traditional country of the Ghana people, and I pay my respect to elders past, present, and emerging. I'll be addressing three topics considering the role of financial planner: regulation and laws, business structures, and contract law. The financial planning industry is regulated by ASIC, which aims to protect the market and consumers from manipulation and unfair practice. They do that by developing policies in regards of the law, by monitoring compliance of the license, and by providing information on companies and corporate activity. ASIC regulates the Financial Services Reform Act, which focuses on market integrity and consumer protection. The main amendment from the Act is the Corporation Act, created by the Commonwealth of Australia, outlining laws for business entities on a federal and interstate level. Jurisdiction is defined as the area which includes northern, capital territories, and referring states. Each provision of the Act applies to Australian citizens or residents of each jurisdiction and former or carrying business in Australia. The Code of Ethics was created by FASIA, which all relevant providers must comply with. ASIC has the power to investigate compliance with the Code of Ethics and suspend or terminate a financial license. A financial planner can use the following business structures: sole trader, partnership, joint venture, and a company, which can be private or public. A sole trader is the simplest form of business structure where we are legally responsible for all aspects of the business. The main advantages are the simple setup and operation, the complete control of the business, and any losses can be compensated with other income. The main disadvantages are there's unlimited liabilities and you're liable to pay tax on all income of the business. Partnership is defined as a relationship between persons carrying a business in common with a view of profit, and can only be between 2 or 20 people. The main advantages are pooling capital and experience together between both partners, shared taxes, nature of business can be changed by agreement, and it is inexpensive to form and run a partnership. The main disadvantages are there is unlimited liabilities, the firms need contracts to be formed with each partner, and the lack of total control and management. A joint venture is an association of persons where there is an agreement for a specific activity in a specific period of time normally, and all the resources can be combined together. The parties' resources, assets, income, and identities are kept separate. A company is a legal entity separate from its owners with its own legal capacity and liability. It needs to be registered by ASIC and have at least one director and shareholder. The main advantages are there is limited liability, where its directors and shareholders are protected under corporate veil. It can transfer shares across, and there are taxation benefits as well. The main disadvantages are the possible loss of control to shareholders, the costs, which involve establishment and other fees, and there are administrative and reporting requirements by law. A contract law is in both common and statute law. Common law are civil cases that become precedent. Statute law is a legislative bill which was elevated to law, which enforces standards of conduct on a contract. A contract is an agreement that can be legally enforceable. There are three elements required to form a simple contract, which are an agreement between parties, an intention to contract, and a consideration. A contract is only valid when both parties have legal capacity and have consented, and there is no illegality of purpose, and all the formal requirements are satisfied as well. A financial planner will create contracts with clients and when creating or changing their business. Financial planner should provide with the financial divisory agreement or contract, a description of services, payments, commissions, limitation on liability, confidentiality, mediation, and termination. This is crucial to ensuring that the client can differentiate between a good and a bad contract, and to abide by the code of ethics as well. Finally, a financial planner needs to understand the obligations of the industry regulators and how the legal compliance is in place in order to be able to hold a license and act as a financial advisor. It is important to know the advantages of different business structures in terms of liability and its legalities. For example, a partnership is viable just if your partner is someone you can trust, because there are unlimited liabilities. Personally, my business structure of preference would be to create a company, and this is for several reasons. First, there is limited liabilities where its members and shareholders are protected by corporate veil. And second, a company is a separate legal entity, therefore has legal capacity to sign contracts. Thank you very much for watching this video and taking the time to watch this presentation.